perfect retirement is one thing. Being able to achieve that is another. But you can do that with Warren Wealth Management. Mr. Marcus Warren joins me once again. And I love talking about everything with you, Marcus. We talk a little sports. We've been talking a little spring break.
Yeah.
And we're ready for the weather to warm up so you and I can get outdoors and enjoy ourselves, right?
You got that right.
All right. Let's talk about your expertise, which is retirement planning, whether it be wealth management, taxes. And today the emphasis is going to be on taxes. So the question I'm going to pose to you, and this is what's great about Marcus, I can ask him anything. So the question I want to pose to you is, okay, so let's say you're in retirement right now.
Yeah.
Okay, but you got a little bit of an income coming in. How much of that is taxable from Uncle Sam? How much of that is he going to take?
Well, you know, Uncle Sam always has his hand in the pot, right? He always wants his piece. And so most people think, you know, when you're retired that Uncle Sam backs off a little bit, and that generally does not happen. So what is taxed when you're in retirement? Well, we already know that all earned income is taxed, meaning that if you semi-retired, you have a part-time job, a side hustle, any earned income, that's going to be taxed. What also is taxed is any distributions from your retirement accounts. That's taxed. If you have a pension, all pension income, that's taxed. If you have rental income, you know, you're renting out, you're doing an Airbnb, whatever you're doing, that income is taxed. And, you know, all that income put together can sometimes cause, and it depends, in certain situations, if you meet some income thresholds, it can also cause up to 85% of your Social Security to be taxed. And so, you know, there's that myth out there that, hey, once you retire, you're going to be paying less in taxes because you'll be taking less home, so you'll be in a lower tax bracket. And what we have found out is, you know, that's not necessarily always the case. Most people, when they retire, they're either paying the same amount in taxes or higher.
Ooh. So you refer a lot on the show to tax buckets because there are strategies to minimize what Uncle Sam can take, and that's what you're all about, is about putting money back in your own pocket. So tell me about tax buckets. What do they mean, and why are these different buckets different?
All right, so you know, with all accounts, retirement accounts, investment accounts, it all fits into three specific tax buckets. You have your taxable bucket, you have your tax deferred bucket, and you have your tax-free bucket. If you see over there on the left, you see your taxable bucket. These are accounts that you have that are taxed along the way, whether you take the income or not. CDs, stocks, bonds, things of that nature. You know, these are things that you get that 1099 from your financial institution, says how much money you made that year, and then Uncle Sam wants his cut. Then you have that middle bucket there, which is the tax deferred bucket. 401ks, your company retirement plans, IRAs, those are things that are not taxed while you put money in. It's taxed when you pull that money out. And then last, over there on the right, you have your tax-free bucket. That's exactly what it is, tax-free, free from federal, state, and capital gains, Roth, some certain life insurance plans, HSA, health savings accounts, 529 plans. Put money in, grows tax deferred, and when you pull that money out, it is tax-free. Now, let's focus on this bucket here in the middle, that bucket that was there in the middle, all right? So that bucket is the tax deferred bucket. IRAs, 401ks. Hasn't been taxed yet. That is where most people, most Americans have their money accumulated in that tax deferred bucket. Now, when they pull that money out, that's when they're taxed. And they're subject to whatever tax rates are at the time that they pull that money out. Now, we work under the assumption that taxes are going to be a lot higher in the future than they are now for a lot of different reasons, the debt, Social Security, Medicare, stuff the government has to pay for. And when that bill comes due for the government, the only way they can pay those bills is by raising taxes or cutting programs or a combination of the two. And so we think that people who have most of their money in those tax-deferred accounts are going to find themselves, as they pull that money out, going into these higher tax brackets.
So there are strategies, though, and that's what I want to talk to you about. I think a lot of times when we think about taxes, we think about this time of year and accountants, and let's talk about annual taxes. But you actually plan for the future, save money for the future. Yeah, it's one thing to save yourself a few dollars this year, but if you're getting at or near retirement age, it's really important that you look forward, right? That's what you do differently.
Absolutely. So when you think about it, especially now, we're about 5 days away from tax season being over. And most people, when they're dealing with their accountants, their CPAs, whomever, they are basically recording history, right? They are recording what had happened in 2021, right? You give them all your receipts, you give them all your documents, and then they present you with this tax returns that says, hey, this is how much you got to give Uncle Sam, and then at that time is when they give you their tax advice. But it's too late. 2021 is already done. And so good tax planning versus tax accounting is proactive. And so what we try to do in our office, since we, in addition to knowing investments, we know taxes, is we try to be as proactive as possible, try to look through the windshield versus the rear view mirror. And so we're always trying to look for ways to save our clients money in taxes this year, because really after April 18th ends, that's when tax planning season begins. Right. Tax planning season begins. You have to plan now for the money that you want to keep in your pocket now for 2022.
So look ahead, be proactive, and that may mean for you to call Warren Wealth Management. A lot of what you do is education, because there are folks out there, and I know from talking to you, your wealth of knowledge, they say, I'm a do-it-yourselfer, I've done pretty well, I've saved a nice nest egg. But if you could save yourself thousands of dollars, why wouldn't you talk to Marcus Warren? Because that's what you're all about. I bet you have clients sometimes who are surprised about how much you can save them.
Yeah, absolutely, because when you're dealing with a typical broker, a typical advisor, they're focused on, and we call it offense, right, as far as getting you the best rate of return on your investments. Sure. We do that because we want to make sure that our clients have diversified portfolios that give them a good rate of return. But our value proposition, and where clients are surprised and where they get the most bang for their buck, so to speak, is the defense we play, and that is by saving clients money. So how can you save clients money? One is by trying to minimize fees, but then more importantly, it's about minimizing or eliminating the tax burden that they have when they're in retirement, and that's what we focus on.
Okay, if you think, I love talking to Marcus. In fact, I told him, I said, let's get together, but he doesn't know I'm going to be picking your brain the whole time. It's not going to be sports or spring break. I'm going to get some info. But with that being said, if you'd like some of this great information, if you'd like to be educated, and if you want the retirement of your dreams, you're willing to do a 15-minute conversation. Yeah. How does that work? You want to see if it's a good fit for both parties, right? Yeah, and so we want to be as efficient as possible, and what we've come to find out is, you know what, let's have a 15-minute phone call. So you go to warrenwealth.net. My calendar pops up. We can schedule that quick 15-minute phone call. There we can find out where you are, what your goals are, where you want to be, and then we can see if we're a good fit, and we can help you from an investment standpoint or from a tax planning standpoint. Okay, so and when it comes to wealth management, you're like Joe Rogan. You're the very best at it. You've got a podcast, listened to quite a bit, as you can tell, and you share. So people say, I want more information from Marcus. I want to hear more from you. Where can they hear your podcast? Anywhere you get your podcast. So you talked about Joe Rogan. You can go to Spotify. There you go. You can go to Apple Podcasts, wherever you get your podcast. It's the Marcus Warren Show. A lot of good information. I would highly recommend it. Yeah, and again, I know I don't mean to be repetitive, but I do think it's important that, yes, wealth management, something you do very well. Yeah. Tax planning, you got to be ready for also some medical issues you may have moving forward. All of those things, looking forward is important, and you guys take pride in doing that very, very well. Yeah, we're a holistic financial advisement firm, and so we're looking at Social Security maximization, making sure that you're on track for Medicare, understanding the premiums, understanding the tax implications of how you receive that income. There's so many things that go into retirement planning, and we're that one-stop shop that can help retirees. All right. So again, podcast, if you'd like to get a hold of Marcus, there's the information up on the screen. Go to your website. You can call that number as well, right, Marcus? And you'll arrange. You can take a look at his schedule on the website, and you'll arrange a 15-minute phone call. There you go. That's exactly what's happening. There it is. All right. Once again, Marcus Warren, Warren Wealth Management. Thank you for your information. I really appreciate it. All right. Thank you. All right. Coming up here, your calling card. It's your